Uh, Welcome all our participants. We have we are ready with another practical training module that is on documentation. Rather, I should be specific audit documentation, and for that purpose, we have invited CA Kamal Garg, who is from Delhi, and CA Vipul Jain. Both the person will take this session, and they will talk about how this audit documentation is important, because whenever we are doing audit, we have to justify that we have done audit with proper care and caution. If somewhere we fail in doing our audit, in applying our intelligence, then we are questionable whether we have not justified our work. So this type of situations arises. But if we keep our documentation proper, whatever work we have done, nobody can question in future. Because whenever there is a case in the disciplinary committee or anywhere, whether you have done your work with full, uh, full seeing all the documents, process has been followed. Wherever you have a query that you have raised a query, you have got satisfactory answers from the client. So these type of things will definitely help you in future. And this time, the challenge with us that since the audit is getting more and more online audits, and everything is on the system, and we are doing checking on the system. So it doesn't mean that we cannot keep the documentation. Documentation doesn't mean only that the hard copy we are keeping in our files. Sometimes keeping soft copy of the documents in proper manner, when we want to retrieve them, we can retrieve. So all our students must be interested in knowing how these documents are important and how to preserve these documents and what type of documents are important in case of audit being conducted by them. So this is the 38th PTM practical training module. Hope our students must be enjoying this and must be learning, because we want to cover areas which are not regular in all the offices of the where you are serving as an article clerk. So over to office for taking the session forward. Thank you.
Thank you, sir. Now we have our two eminent speakers, CA Kamal Garg ji and CA Vipul Jain ji. CA Vipul Jain ji is moderating the session today. He's a chartered accountant with over 10 years of corporate and consulting experience and currently practicing in internal audit, risk and process re-engineering and workflow management. He is having experience in ESG reporting and GST also. Before getting into full-time practice, he was employed with the PepsiCo in various capacity and levels, looking after Indian and US reporting, internal audit, statutory audit, US tax package planning, treasury and exports, and commercial finance. He's a graduate in BCom from St. Xavier's College. Over to you, Vipul sir.
Thank you so much, Vidiji. That's very kind of you. Sushil sir, good morning. Kamalji, good morning. And a very, very warm good morning to everybody who's attending today's episode. We could have been anywhere under the sun on this lovely Sunday morning, but we chose to devote the forthcoming couple of hours to education and to self-development. And a massive shout out to everybody who's making time to be here right now with us. As Sushil sir rightly mentioned, today's next few hours are dedicated towards audit documentation. The audit reports or the certificates could be the what of it, but the why and how is what we're going to focus upon. Not just it is a measure of the quality of the work done and an internal rating of how we arrive at what we do, but also a legal backup of how we arrive at the conclusions that we arrive at. So justification of what we do, why and the how of it is what we're going to talk about. And who better else than CA Kamal Garg to discuss and deliberate on this topic. I have in front of me a very elaborate profile of Mr. Garg, and I am very proud to read it out and introduce Mr. Garg to the entire audience today.
So, Vipulji, sorry to interrupt you. I'm not sure who is going to introduce me. My simple request is keep introduction in maximum 2 lines, not more than that.
Well, that's very humble of you, sir. Sure, I will try to do my best. So, CA Garg is a fellow member of the Institute. He's a graduate from Deen Dayal University, Upadhyay College, University of Delhi. He's also a DISA holder, and he's also a registered professional with the IBBI, also a qualified certificate course holder on BRSR, and also a special invitee on the ASB, that is the Accounting Standards Board. Now, sir, I will not be able to restrict myself to 2 lines. but please allow me the pleasure of reading out the balance. He's also a regular guest speaker to IFRS and management development programs at various forums, not just with ICI, but also with ICSI. He has had dozens of books and commentaries on IFRS and India's concepts and applications, guides to financial reporting, and other documentations and other publications owing to COVID-19. With all of these put together, sir, your expertise and your valuable insight on the topics would be of great wealth and importance to our audience. I would request you to now please take it up and start deliberations.
Thank you very much, Vipulji. I'm thankful to Sushil Goyalji. I'm seeing him after around 6 years. I met him in Bhubaneswar some time back, and then lockdown came up. So good to see Sushilji. And thankful Vidhiji for giving me this opportunity to have address on this platform. I can see the pick of Kapil Gupta ji, a very past good friend. So good morning, Kapil ji. So before I share my screen and discuss the topics with you, I need to ask one question for which I would request Vipulji to pass on the answers. Are we scared of documentation, or is it something which is new to us? Answer perhaps should be no. Reason being, documentation is a kind of element which we also pursue in our normal routine life. So today I will be discussing this topic of audit documentation through my PPT, and I will request each one of the listener to keep their notepad and pen ready to take some critical notes, as well as be ready to answer my questions. I will be discussing certain practical case studies because that's the theme of today's discussion. So I will be teaching you how to draft working papers. Normally, what I have seen in CA firms that students are not aware how to draft working papers. So I will not only teach you the technical aspects, but also I will be handling how to draft. So we'll make a sample draft to working paper as well. So I'm sharing my screen. Just give me a confirmation once my screen is visible. Vipulji, are you able to see my screen?
Not yet, sir. Still loading. Yeah,
yes,
now we can see your screen.
Visible.
Now we can see your screen.
So this is my topic, audit documentation. So to set the tone, let me ask you certain questions, and I will request Vipulji to answer my questions, which can be given by the students. So to have the beginning, and in fact, we should not go into auditing standards initially. Before we go into and delve into auditing standards, let us see as a layman what documentation is. Forget the word audit. Let us understand as a layman what documentation is. So let me ask you some theme setting questions. Theme setting question number 1. So take this example. You placed an online order for purchasing 500 ml Sunsilk shampoo bottle and opted for cash on delivery payment for rupees 300.
मैसेज पढ़ लिया उन्होंने सुबह मेरा तो फिर
Vidhi, can you please keep on mute? Thank you. So I'm reading this question once again. You placed an online order for purchasing 500 ml Sunsilk shampoo bottle and opted for cash on delivery payment for rupees 300. So 300 is all inclusive. Now what happened on the delivery day, the delivery person came to your house and he delivered 250 ml Hello shampoo bottle. Plus, he also asked you to pay rupees 300 purchase price and rupees 50 as delivery charges. Now question is, how you will establish your facts in the above matter? One thing is, you will be happy to take up Hello shampoo bottle and pay 350 rupees, but ideally it never happens. So how you will contest, how you will establish that in fact you ordered 500 ml Sunsilk shampoo bottle for rupees 300, which was all inclusive. What you will do? So I'm waiting for your answers, and then Vipulji will pass on the answers to me. Vipulji, any answers?
Kamalji, we have a couple of answers pouring in, and the common theme seems to be copy of the order or screenshot of the order versus the bill.
So what you will be doing, if I type it here, how we will prove? I should say, what are the proofs with you? Proofs could be copy of order. I mean, online order. It could be screenshot, it could be a printout, anything else. Then you must have SMS or email that confirmed what order you have placed. Now, what you will do, you will place all these things before the delivery boy. And you would be able to contest, you will be able to establish your case that I ordered this much of quantity, that is 500 ml, and this much of brand, that is Sunsilk shampoo bottle. This was the price, 300, which was all inclusive. Now, with this virtue, what is going on? With this virtue, what is going on? Listen my words very carefully. You are producing, I repeat, you are producing, you are furnishing some proofs before the delivery person to establish, to justify I echo with the word justify, with even Sushilji also stated, you just justify that what was the real scenario. So what was the real scenario? Purchase of 500 ml Sunsilk shampoo bottle for $300 all inclusive. Then you would be able to prove this thing by virtue of a written juncture, written chunk. That written chunk is known as documentation. I'm not using the word audit. I will use the word audit documentation at a later stage. But for the time being, you must understand the theme. The theme is documentation. So that whole chunk which you produce before the delivery person is known as documentation. So what is the point of documentation over here? The objective of documentation is it is helping in, number one, proving that you place the order. Number second, proving that what was placed as an order. And number third, it is helping in proving that what was the price, what was the brand, what was the quantity, and so on. In the same way, let us move to the theme setting question number second. So this is a kind of online order. Now let us have a theme setting question number second. Consider the situation. You withdrew cash rupees 10,000 from a nearby ATM of a bank. So now let us go into a bit of accountancy jargons. You withdrew cash rupees 10,000 from nearby ATM of a bank. After a week, you found that the bank statement reflects that an amount of rupees 11,000 was withdrawn from your account. The bank statement also reflected a debit of rupees 250 as bank charges for issuing checkbook. But you have not placed any such request for issuing checkbook. So ultimately, the question is same. What you will do to establish your facts in the above matter? How you will go to the bank and fight with them that I never withdrew rupees 11,000. I never asked for a checkbook. How you will fight with them? Again, you will be having some proof. The proof will be the ATM withdrawal slip, the SMS you got or the email you got. This will be a proof for withdrawal of cash, number one. Number second, when you place a request for issuing a checkbook, you may place the request either by visiting the branch or by placing it online. Whenever you will place this request, you will be issued one SRN, service request number. If you are not having any service request number, that means that you don't have the proof. That means you never undertook this kind of request. So by all this documentational aspect, you would be able to prove before the bank that I never withdrew rupees 10,000, rupees 11,000. I never requested for a checkbook and so on. All this proof is known as documentation. Now let us come to theme setting number 3. Again, let us move to an upper layer of accountancy. So let us assume now you're an accountant working with ABC privately. You pass the following journal entries in the books of accounts. Depreciation of plant and machinery on SLM basis, rupees 10,000. Provision for bad and doubtful debts, rupees 500. Payments of salaries and wages, rupees 50,000. Now what happened? The senior accounts manager is contending that depreciation should have been rupees 9,500. Provision for bad and doubtful debts, rupees nil. And he's also contending that salaries and wages should have been rupees 40,000 after leaves and absences. So question again is same. As an accountant, how you will protect yourself from the questions being raised by the senior accounts manager. So first question is, accounts manager says depreciation should have been rupees 9,500 and no rupees 10,000. What you will prove? You will show him the Excel sheets. You will show him your working papers, rough notes, notebook, register, whatever, wherever you have computed the depreciation. So what will happen? You will basically show him how you have computed depreciation. That will be your protection number 1. Number second, provision for bad and doubtful debts, rupees nil. As an accountant, you cannot write off bad debts on your own. Somebody will instruct you from the senior management that please write off this debt because it is no longer recoverable. So what you will show? You will show to the accounts manager that I am being instructed, say for instance, by the CFO or by any other director of finance that this much of debt is not recoverable. So please create a provision for it. So whatever instructions I received from the management in writing, I will show this to the senior accounts manager as a matter of my protection number 2. Number 3, salaries and wages, rupees 40,000. Now, how you will protect yourself? You will show that the human resource manager has not given any kind of such computation whereby it was including the salary computation after leaves and any kind of absenteeism. So meaning thereby you will be showing the workings given by the human resource manager. And that will be acting as your protectional force. So ultimately what is happening? You are demonstrating that you were intelligent enough to compute depreciation, and you were diligent enough to provide provision for bad and doubtful debts and payment of salaries and wages on the basis of workings done by somebody else. And all these papers, all these workings collectively are called as proofs, or technically they are called as documentation. I believe from these three theme setting questions, you must be able to understand what documentation theme is. Now let us change as a customer or as a client. So if I go to question number 1, I was a customer. I go to question number 2, I was a client, and here I am an accountant. Now consider the situation. I am the auditor of ABC Private Limited. I am the auditor of ABC Private Limited. I also will be examining whether depreciation has been correctly computed or not. I also would be assessing and evaluating whether provision for bad and doubtful debts is appropriately provided or not. I will also be examining whether payments of salaries and wages are after considering the attendance sheet or not. When I will be examining these financial figures, these financial elements, I also need to create a proof so that day after tomorrow, if say Vipul Jain ji asks me, Vipul Jain ji will come to my office and will say, Vipul Jain ji will say, I am from National Financial Reporting Authority, or I am from Peer Review Board of ICI, or I am from Quality Review Board of ICI. Please show me, Kamal, have you carried out your audit rightfully or not? How I will show him? I will show him by virtue of my own workings. And when these workings are prepared by the auditor, they are called as audit documentation. So what is the change coming up? When a documentation is made by general public, it is not called as audit documentation. It is a normal documentation. But when such kind of documentation is prepared by an auditor in respect of the audit conducted by him, that becomes nothing but audit documentation. And how it is being dealt? For this purpose, Institute of Chartered Accountants of India has issued auditing standards. One of the auditing standards dealing with audit documentation directly is SA230. I repeat, SA230. SA stands for Standard on Auditing. Now, what does SA230 says? SA230 says that documentation is also known as working paper. So what is the objective of working paper? Working papers help in planning the audit. Working papers help in supervising the audit. And working papers help in proving that audit was actually carried out. I repeat once again. So documentation working papers can help the auditors. Yes. How they can help? Help number 1, they can help in planning the audit. How they will help in planning the audit, I will discuss in a while. Number 2, working papers will help in supervising the audit. How they will help in supervising the audit, again, I will discuss separately. And lastly, working papers also help in proving that audit was actually carried out. If I give an example of last objective, proving that audit was actually carried out. So let us come back to the same example. So let us assume Vipulji is from NAFRA. NAFRA stands for National Financial Reporting Authority. And Vipulji is asking Kamal, prove that as an auditor, you have verified the computation of depreciation on plant and machinery. How Kamal will prove? Kamal will show the workings made on Excel sheets. And then I will be able to prove that I was diligent enough to compute depreciation properly or not. And that is where I will say I will be able to prove that audit of depreciation actually was carried out. SA 230 has defined working papers also. And what they say, audit working papers are also called as audit files or merely the documentation. And these are the records comprising of 3 elements. So audit documentation is having 3 elements. Element number 1, it is a record of audit procedures applied. Number 2, it is a record of audit evidence obtained. And number 3, it is a record of audit conclusions achieved during the course of audit examination. For all these, we have several case studies to discuss on a practical note. Now, let us come back to this element, audit procedure. So what the definition is saying, audit documentation is a record of audit procedure applied. What is the procedure? For example, risk assessment procedure. So let us assume I am going to vouch and verify plant and machinery. So one of the procedures is I will assess the risk involved in plant and machinery vouching and verification. Now you must be wondering, what is the meaning of risk? So we'll discuss risk separately with some practical questions as well. Number 2 is audit evidence obtained. In my example, the Excel sheet which was demonstrating the computation of depreciation is nothing but audit evidence. Stock register, audit evidence. Plant and machinery records, audit evidence. Purchase bills, audit evidence. Sales bills, audit evidence. So audit evidence obtained. And then is audit conclusions achieved. Now, what is audit conclusion? On the basis of your examination, either you will come to true and fair view objective, or you will say that financial statements are not reflecting true and fair view. So whatever conclusions are achieved, that means whether financial statements are reflecting true and fair view or not, whether depreciation is misstated or not, all these things are audit conclusions which need to be comprised in the audit file. Don't worry, for all these 3 points, we have separate case studies which you will be knowing in a while. Question arises, if I, being auditor, is preparing working paper, whose property is working paper? So the standard is very clear. SA 230 states that working papers are the property of the auditors. So it is the discretion, it is the choice of the auditor whether to hand over a copy of working papers to outside parties or not. But be precautious. We do have Chartered Accountants Act and we do have engagement and quality control standards. You can take a note of this statement because it is not in PPT. Engagement and quality control standards as well as Chartered Accountants Act states that if a CA in practice being an auditor, discloses information about the client without any legal requirement, then he will be guilty of professional misconduct. So meaning thereby, as a 230 also says, working papers are your property, you will not share it with anybody unless and until there is any legal requirement. So for example, if Vipul Jain is coming from National Financial Reporting Authority and he says, Kamal, show me your working papers, am I duty bound to show? Answer is yes. But take another example. ABC Private Limited is my client. I am the statutory auditor. Next year, auditors were changed. So Kamal was retiring and Vimal was admitted as an auditor. So question arises whether the new auditor can ask the previous auditor to furnish the copy of working papers. Answer is no. If he is asking, then Kamal is not duty bound to furnish the copy of working papers because it will breach confidentiality. The same thing was also held in Chantre, Martin and Company case. It's an English case law. So auditing is not new to India. It was there in British Raj also. And at that very time, there was a CA firm, Chantre, Martin and Company, and it was held that working papers are the property of the auditors. This is basic theme only. Once we will go into practical case studies, we'll get to know much more things. But please answer this question. Let us make a case study. The case study is here. Let us have a case study to understand. Say, Mr. X was the statutory auditor of XYZ Limited for, let us assume, financial year 21-22. Now, Mr. Y is the new statutory auditor of XYZ Limited for financial year 22-23. This is possible. At annual general meeting, you can change the auditors. Now what happened? The management of XYZ Limited is asking Mr. X to furnish the copy of his workings made by him to audit the company. Question is, can Mr. X do so? Yes, any answer? And please be very careful. I am using the word can. I'm not using the word must. So what is happening? The company's management is saying now, because auditors are getting changed, so whatsoever you prepared for vouching and verification of XYZ Limited, you should furnish a copy of the same. So let us take an example. The management of XYZ Limited is saying to Mr. X, please furnish the computation you made for verifying our depreciation. Please furnish a copy of workings you made for the purpose of verifying bank reconciliation statement. Please furnish a copy of workings you made for verifying transactions with parties related. All these working papers were prepared by Mr. X. So the company is saying now, Mr. Y will be the auditor. You are no longer our auditor. So whatever copies you have prepared, one copy should be given to us also. The question arises, can Mr. X do so? And I repeat, the precaution is, can Mr. X do so? I'm not saying must Mr. X do so. Or I should ask you, is it a mandatory thing to do or is it a discretionary thing to do for Mr. X?
We are getting mixed responses, Kamal sir.
And what is your response, Vipulji?
My response would probably be, so it is Mr. X's discretion. He can choose not to give it, and I don't think he's even bound to give it.
Yes. So what is the correct answer? The correct answer is, just we have seen, working papers are the property of the auditor. So it is his discretion to furnish a copy of the same to company or not. Mind you, the word here is company. Had I written the new auditor or had I written outsider other than regulators, then he cannot do so. So if he's going to furnish the working papers to the company itself, quite obviously he can do so because ultimately workings are belonging to the insider information of the company itself. So for what you need to remember, if I say in a sentence, by virtue of SA 230, read with this case law, Chantre, Martin and Company case, I am showing once again, what is the conclusion coming up? Conclusion number 1, the copy of working papers may be furnished to the company itself. When I say may means it's the discretion of the auditor. Number 2, the copy of working papers shall not be furnished by the auditor to any outside party, including the new auditor. Number 3 conclusion, however, the copy of working papers shall be furnished to the regulators on being asked to furnish such kind of information. Am I clear? This point is very, very relevant. So there may be a scenario like nowadays you must be seeing in the newspapers also, NAFRA is doing the quality review of most of the CA firms who are into listed domain. So when NAFRA comes to your office for seeking the information, it is your duty to furnish the working papers of the respective client you audit. Now, having said that, let us move forward. So I was discussing audit procedures applied. One of the procedure where most of the students are confused and are lagging is assessment of audit risk. So let us understand theoretically, first of all, what is audit risk? And then we will do a case study from real world to assess the audit risk. So first of all, let us forget about what the standard is saying. I need to know from you, what is the layman understanding of audit risk? As a layman, what is the understanding of audit risk? Any answer, Vipulji?
Not so far, sir.
Okay. So let us understand audit risk in a way. I am asking one question. Please try to answer this question. Then I will show on the screen. Question is, and think logically before you answer. The question is, Vipulji signed one audit report. He issued this audit report. Now, please tell me, students, once Vipulji signed the audit report, issued the audit report, can Vipulji claim that now nobody can search, nobody can find any misstatement in the financial statement? So once the auditor is signing the audit report, can he be 100% sure? Can he be 100% sure that everything is pakka all right? No kind of misstatement will be there. Is it possible? Yes or no?
Unanimous no.
Unanimous no. Thankfully for this question, there is no mixed response. Answer is no. That means now listen one more statement. Can I say, because of my first question, can I say now, despite audit being carried out, always there is a probability, always there is a possibility that financial statements may still contain certain misstatements? Yes or no? Answer again must be unanimously no. Meaning thereby, always there is a probability. Always there is a probability that financial statements may still contain certain misstatements despite audit being carried out. So dear students, this probability technically is called as audit risk. Now you can call it as audit risk, you can call it as probability, you can call it as a possibility. That is your choice. But technically, our standards are using the word audit risk. Risk means the possibility only. So what is risk? Risk is a possibility. So things may go wrong is a risk. In audit, what can go wrong? The things can go wrong is, despite audit being carried out, certain misstatements still were there. And here comes the logical question. If on one hand we say that despite audit being carried out, audit risk still is there, that is, the possibility of financial statements containing misstatements still is there, question arises, can I say that auditor always is subjected to audit risk? Answer is yes, because once you audited the financials and issued the audit report, still you are facing the audit risk. Now let us come to the third layer. Nafra came to Vipulji's office and Nafra stated, Vipulji, you signed the audit report, but you have not discovered this misstatement. You are guilty. So question arises whether Vipulji always is guilty. Whether Vipulji is always guilty? Answer is no. How Vipulji will defend himself? Vipulji will defend himself by furnishing a copy of working paper before Nafra, whereby he will be proving that genuinely he applied audit procedures. And then he will prove, despite audit procedures being applied, these things were not discovered because these were inherent in nature. Why inherent in nature? Very simple example. If a management person is not furnishing certain documents to you, you will not be able to know in most of the cases whether these documents exactly were there in company or not. So when management is hiding information from you, when management is concealing information from you and you cannot discover this information from other sources, that does mean it is a kind of inherent risk in the audit. For that purpose, Vipulji will not be liable, but yes, he has to prove that this was inherent risk in the audit exercise. And how he will prove? By virtue of furnishing a copy of working paper. I believe you must have understood the concept of audit risk as a layman. So let me move forward and discuss in detail. I will come to this slide after some time. I am skipping 3 slides. I will come back to them after some time.
Okay.
So let us understand audit risk. So what is audit risk? Audit risk, just see the left-hand side, extreme left. Audit risk is the possibility. Technically, this possibility is also known as susceptibility. Audit risk is the possibility or susceptibility of misstatements in financial statements, despite audit being carried out. So what is the point coming up? Audit is conducted, and despite audit being conducted, misstatements may, I repeat the word and emphasize, may still be there in financial statements. That may is known as susceptibility of misstatements, and technically it becomes nothing but audit risk. Before I discuss types of audit risk and discuss case study with you, see the word misstatement. I believe being CA students, you must be aware what are financial statements. Financial statements primarily are your balance sheet, your statement of P&L, cash flow statement if applicable to a company, then notes to accounts along with Schedule 3 requirements. Now my question to the house is, those who are listening, try to respond. What is your understanding about misstatement? I will give it 30 seconds to respond back. What is your understanding about misstatement? Vipulji, any answers?
So we have a couple of answers coming in. We have somebody saying that misstatement could be any information which has not been calculated or measured correctly, but reported. Okay. Then we have a response which says that information has been willfully misreported.
Okay.
And not caught by the auditor.
Okay.
And we have a couple of more answers, but on the same themes.
On the same footing. So ultimately, the theme is clear to the students. Can I say misstatement, as a layman again, can I say that misstatement means what was required to be done, but what is done, and the difference between these two. So misstatement is the difference between what is done and what was required to be done. I repeat as a layman, misstatement is the difference between what is required to be done and what was done. For example, inventory was required to be valued on FIFO basis, but inventory was valued on LIFO basis. So question, whether LIFO basis is permitted? Answer is no. Accounting Standard 2 prohibits usage of LIFO basis. Similarly, Ind AS 2 also prohibits usage of LIFO basis. So company was required to value the inventory on FIFO basis, but the company valued the inventory on LIFO basis. So please tell me in your answers, the valuation of inventory on FIFO basis should have been rupees 100, but the valuation of inventory on a LIFO basis is rupees 90. What is the amount of misstatement? I repeat my question. My question is inventory valuation on FIFO basis, rupees 100. Inventory valuation on LIFO basis, rupees 90. What was required? FIFO. What is done? LIFO. What was required? 100. What is done? 90. So what is the amount of misstatement?
10.
Rupees 10.
10.
Now, when rupees 10 is the misstatement, how you will prepare working paper? Very simple now. Let us assume this is your sample working paper. Sample working paper. What you will do, you will give a heading. Inventory. Then you will write, we examined the valuation of inventory and observe that the same was valued on LIFO basis at an amount of rupees 90. Now just see what I'm writing. We accordingly applied. What is the meaning of word applied? Applied means procedure. Procedure applied. We accordingly applied computational procedures and concluded that. See the word concluded. Sorry for the spelling mistake. I'm not good in typing. And concluded that on FIFO basis, the value of inventory should be rupees 100. Just give me a moment. So up till now, what is happening? What I wrote, the working paper is not complete. What I wrote inventory. That means for inventory, I am making my recording of various proof. Proof number 1, we examined the inventory valuation from stock register, etc., and found it was valued on LIFO basis. The amount was rupees 90. Then we applied our own procedures to verify whether this rupees 90 is correct or not. So on application of procedure, what procedure we applied? Computational procedure. We concluded that on FIFO basis, the valuation should be rupees 100. Then, hence, we further concluded that, now just see what I'm writing, concluded that the inventory, now we follow double entry system. So inventory is improperly valued. Ultimately, it will be impacting your profitability also. Concluded that inventory and profitability are misstated by rupees 10. How this rupees 10 is coming? 100 minus 90. This, now what I'm writing are misstated. Now, but this, by writing this sentence are misstated, I'm not able to understand what this misstatement is impacting. Whether profitability is getting increased or decreased and so on. So what I will be writing? The profitability. Tell me whether profitability will increase or decrease.
Increase.
Just a moment. The inventory and profitability respectively are, fill in the blanks, by rupees 10 for financial year 2223. Yes. So inventory was required for rupees 100, but it is for rupees 90. That means 10 rupees is the downfall. Am I clear? So that means profitability is understated. Inventory is also understated. Inventory and profitability respectively are, what I will be writing, understated. Just give me a moment. I believe this point is clear. So just see what happened. What was the definition saying? Definition was saying audit documentation is number 1. Record of audit procedure applied. Am I having audit procedure? Yes. These are 2 audit procedure, no? Audit procedure applied, audit evidence obtained. What will be the audit evidence? Audit evidence will be, I will be writing here, by examining stock registers. and purchase sales invoices. Now, audit procedures, audit evidence, stock register and purchase sales invoices. And lastly is audit conclusion. What is the conclusion? You can see the last paragraph. Now, this is known as working paper. Give me a moment, Vipulji. This is known as working paper, whereby you're recording what you did, how you did, and when you did. Because of space constraints and PowerPoint, I'm not writing date and who reviewed other things. So, in addition to this thing, what is required? In addition to this thing, what is required? For example, date. Date means on which date you prepared the working paper. Plus, who prepared the working paper. Then is reviewer, who reviewed the working paper. Are you getting this point? So this working paper is merely a sample one. You can have much more inputs over here. More the comprehensive working paper, more would be your safety. Vipul ji, aap kuch keh rahe the?
So 3 questions, sir, and there are 3 questions regarding this topic, and I think we should take it up because these seem to be a common perplexity amongst all the students. Number 1 question is, are we also responsible for convincing the management that there is a misstatement? Please correct it. Number 1.
Yes.
We are responsible.
Yes, you can take a note, students. This is being written in essay number 450. That you have to convey the misstatement evaluated by you to the management. But how you will communicate? This is written in essay number 260. Communication of matters to those charged with governance. So this will come up. If I show you, this will come up in this slide. Just see this one. Retain a copy of communication made with management or TCWG. What you will communicate? Evaluation of misstatements. So that communication is required because otherwise audit will become one-way track. No, so it has to be a common dialogue. It could not be a monologue.
So, sir, does the SA 450 also talk about getting a counter signature or an acceptance or an acknowledgement that yes?
That is not given by SA 450. That is given by SA number 260 and SA number 265. Normally nowadays, because online audit is going on, so people do send emails and they take confirmation on emails themselves.
Correct. So the next broader question which we receive here is how long back are we supposed to go back? For example, what I understand from the question is that this closing stock is for this year, which is also a metric of the opening stock. Correct, sir? Because opening plus purchases will lead you to closing.
Yes.
And opening is again a product of the last year's operations.
Yes.
That last year's operations. So how long do we need to go back?
So for that purpose, we do have, you can take a note, students. For that purpose, we have, that's a very good question, in fact. For that purpose, we have SA number 510 and SA number 710. I repeat, SA 510. SA 510 deals with opening balances. So SA 510 very categorically states that auditors of the current year have to ensure that the opening balances are free from material misstatements. Now, there could be a situation that in the previous year, you were the auditor. If you were the auditor, matters will not be complicated because most of the information will be known to you. But the problem arises in 2 cases: when the previous year figures were unaudited or the previous year figures were audited by some other chartered accountant. In that very case, Institute of Chartered Accountants of India in SA 510 states that while carrying out current year audit, you have to be precautious to ensure that the opening balances are not containing misstatements. So, meaning thereby, Institute says that we are not telling you that do the re-audit of the previous year figures. Only thing is, in the current year, be cautious. And how to be cautious? You can take a note. SA number 520. Apply analytical procedures. So you have to apply audit procedures in a manner. You have to apply audit procedures in a manner which do not require re-audit of the previous year figures. But yes, still you need to be alert. Alert means you need to be professionally skeptical. And for this, I can make a very simple scenario. This prior period item, accounting of prior period errors, is nothing but your question basically. Opening balances, SA 510. So how to audit prior period item? I believe each CA students know that last year information may come to limelight in the current year. So what I will do, I will first apply accounting standard number 4 and 5. And then I will apply audit procedure given by SA number 510. So big thing, cutting short, Auditors are duty bound to ensure that opening balances are not containing misstatements. How they will be ensuring? There is no need to do re-audit. Only in the current year remain alert about the possibility of misstatements in the opening balance that can come to the limelight by virtue of external confirmations. That means you can write to the third party, please confirm, or by applying analytical procedures and so on. I believe this point must be clear to the students. If still they have doubt, they can ask.
So, Kamal sir, is it viable or is it even wise for us to reach out to the prior auditor and ask him how did you arrive at these numbers?
Yes, you can ask. For example, when auditors are changed, when auditors are changed. So let us assume earlier you were the auditor, current year I am the auditor. So when I will be accepting the appointment of an auditor, there's a requirement. Before accepting the appointment as an auditor, the new auditor need to communicate with the previous auditor. So before accepting the audit assignment, what I will be doing, I will be communicating with you.
Correct.
And I will be asking you, sir, I came to know that you were the previous auditor. Please tell me any special precautions to be kept in mind regarding opening balances and closing balances of so and so year. I can make this communication even prior to acceptance of appointment, or at a later stage, I can do the communication even then as well. There is no prohibition as such. But let me be very kind of conservative, pessimist. The previous auditor is not responding back. If previous auditor is not responding back, no problem. Institute of Chartered Accountants of India has given a guidance for that purpose also. The guidance is able to fulfill this kind of element. Then what you will do, in your audit report, disclaim that I am not able to comment upon the opening balances.
Correct.
Because necessary information was not available with me.
Correct.
But yes, for this question, I must give a precaution. Whatever we discussed, this must be documented. So what I will document, I communicated to Vipulji, Vipulji didn't reply. Or Vipulji replied, whatever scenario will go on. Then, on the basis of reply or no reply, I was not able to conclude or able to conclude, that I also will be documenting. Right. Are you getting my point?
Right.
So for this purpose, you can take a note.
Vipul, so you can still ask me, Vipul, why did you close at 90? And can I say, sir, audit documentation, I'm not bound to respond. I'm not bound
Yes, you can. Yeah, that is the practical toughness which we have to face in one way or the other. But yes, most of the chartered accountants are cooperative and they are helping in nature, so they don't respond to you very well. And yes, I was telling you, each of the students should take a note, because this is a very good question. For this purpose, you have to take the guidance from SA 510 and SA 710. SA 510 deals with opening balances and SA 710 deals with comparative financial statements.
Correct.
Other question, Vipulji?
No, sir, that is it.
Okay. I'm showing you an Excel sheet. Just see how in real world the working paper look like. Are you able to see an Excel sheet, Vipulji?
We can see a sheet, sir.
So just see, this is the Excel sheet. I have changed the data and something just to keep the confidentiality. Otherwise, you will file a complaint against me. Confidentiality breached. So just see how we are preparing working paper, client name. And just see, several sheets are there. We can add on several sheets. So this sheet is regarding test of details or analytical procedures. So client name, here you will write the name of the client. Like in my case, it could be ABC Private Limited. Working paper title, I am having short-term receivables. In my example, it was inventory. Balance sheet date, whatever date you are preparing, like in my case, it was 31st March 23. Prepared by client, answer is no. The audit working papers are prepared by auditors only. Can you give me any example of working paper prepared by client? Working paper prepared by the client, which is examined by the auditor. Can there be any such kind of working paper? Very simple example.
Precision logic test.
Bank reconciliation statement.
Agreed.
It could be bank reconciliation statement. It could be working of stock. So certain documents can be prepared by client also. So if I am writing prepared by client, yes, then I will add one more column here. Examined by CA or not, examined by article or not. Then working paper, number of working paper, generally working paper is sequential in nature. Working paper number 1, 2, 3 and so on. Like this. This is EX2. EX means exhibit. EX means exhibit 2. If I show previous one, it is exhibit number 1. So this way, it is solely your choice. And what I must tell you one more good thing. SA 230 is providing you the principles and guidelines to prepare and maintain working papers. It is not giving you prescribed format of working papers.
Right.
So as on date in India, we do not have any prescribed format of working papers. Working paper format is entirely your choice. Then is preparer. Preparer means the person who prepared, like my article assistant prepared. So I will write the name of the article assistant here. Date completed. That means what is the completion date on which the conclusion is arrived. Then is reviewer. Reviewer means the senior partner. And then date reviewed. That means on which date it is reviewed. What is the objective of working paper? In my case, it is short-term receivables. Objective is to verify that notes receivable appearing on the balance sheet of this company has rights to them and their valuation is appropriate. What I will do, I will write inventory as far as my example is concerned. Then we will do these procedural aspects. So whatever working we are making, this is nothing but a kind of working of computing 190. So how 190 is computed, that you will do here. So this is basically this shaded area basically is very circumstantial. So it is a working of short-term receivable. In my example of PPT, it will be inventory working. So in your costing paper, you're preparing big sheets, no?
Correct.
For arriving at the value of inventory. That sheet you will prepare over here. And then conclusion. This Tirmar legend is, I am using some short forms over here. So this is the reason. What is the short form? Like T means praised face amount, interest rate, issue of maturity dates, etc. C means agreed to confirmation. This C means calculation checked and agreed. F means what it means I will see later. TB means trial balance. So I believe this is a simple format of working paper, and you can devise your own format as per your choice, because as on date in India, we do not have any prescribed format of any working paper. So it is purely your choice. So I'm coming back to PPT. Up till here, if you have any question, you're most welcome to ask.
None so far, sir.
No question. So now what you have understood is what is audit procedure. I mean, if I go back, what is audit procedure, what is audit evidence, what is audit conclusion, and how they are recorded in working papers. I skipped these 3 slides. Again, I will ask you to wait for some moments. I will come back to these slides later on. I was discussing audit risk. So what is the audit risk? Possibility of misstatement. Now you know very well what is misstatement. I took the example of inventory, FIFO and LIFO. Now what are the types of audit risk? So let us understand types of audit risk in totally Desi style, Indianized style, without any technical jargons. So there are 3 types of audit risk: inherent risk, control risk, and detection risk. Forget about definition. I'm keeping the screen white. So how many risks are there? 3 risks: inherent risk, control risk, and detection risk. Inherent risk, listen my words carefully, then I will show the screen also. Inherent risk is the possibility that financial statements may, whenever I will use the word possibility, it will be coupled with the word may. Inherent risk is the possibility of misstatements in the financial statements when internal control system is absent. I repeat, inherent risk is the possibility that financial statements may contain certain misstatements due to absence of internal control system. I believe this sentence is quite simpler. I repeat once again. Inherent risk is the possibility that financial statements may contain certain misstatements due to absence of internal control system. Now is control risk. Control risk is the possibility that financial statements may contain certain misstatements due to weak here is WEAK, weak internal control system. Detection risk. Third one is detection risk. Detection risk is the possibility that financial statements may contain certain misstatements despite vouching verification being carried out by the auditor. I repeat, when financial statements may have misstatements despite vouching verification being carried out by the auditor, that is known as detection risk. That is the simplest form of definition. Let us take an example to understand. ICAI organized a webinar for students and put up a fees of rupees 100 per student. Let me type on the screen so that the things could become easy, otherwise it will go above the head. So what happened? ICAI, this is a hypothetical question as an example. Don't take it seriously, but understanding will be perfect. ICAI organized a webinar for students at a fee of rupees 100 per student. Now just give me 5 minutes and you will be loving this concept for whole life. This concept will be clear to you. Now further facts are, ICAI also put up a condition that to visit webinar portal, you have to provide your student registration number. On the day of webinar, it was found that 1,000 students enrolled for the same, and the total fee collected is rupees 100 into 1,000 equal to rupees 1 lakh. Just a moment. Okay. Now, Vipulji was the moderator cum reviewer of this webinar. He found that, now I'm giving you some more facts. He found that (1,001), or I should say 1,005 students were attending the webinar. Miss Vidhi was also attending the webinar. Number third. Okay, this might be sufficient. Otherwise, it will become complicated. So now activate your CID brain. Now, what is happening over here? Just see. You have to do the risk assessment. So forget about detection risk. Please tell me what is the inherent risk and control risk over here. What is inherent risk and control risk over there? Vidhi ma'am, I'm sorry, I'm using your name as an examplist. So it is purely hypothetical. Yes. So I read this question once again. ICAI organized a webinar for students at a fee of rupees 100 per student. ICAI also put up a condition that to visit webinar portal, you have to provide your student registration number. On the day of webinar, it was found that 1,000 students enrolled for the same, and a total fee collected was rupees 1 lakh. Now, Vipulji was moderator and reviewer. So what he found that 1,005 students were attending the webinar. And second thing which he found was Miss Vidhi was also attending the webinar. So basically, last 2 points are important for me. So activate your CID brain or auditor brain and tell me in point number 1 and point number 2 in the last, what do you feel is inherent risk and control risk? Okay, for your easiness, let me do something more. So you must be saying, Kamal, because we have to tell the misstatement. So let us go to the misstatement. Because of this, what will happen? ICAI revenue from webinar should had been rupees
1 lakh.
110,500, but it is rupees 1 lakh.
Mm-hmm.
So it's a kind of misstatement, no? Here, I will write nothing. Because Vidhi ma'am ji will reprimand me otherwise. So, I give you 30 seconds, students. Let us have a practical flavor to your learning so that you need not mug up the definitions of audit risk in times to come. So my 25 experience had been like that, especially when I see my article assistants. They are generally, perplexed with what is audit risk. When I will give the answer, I will say very simple. Nothing is tough. Think on this line. What is inherent risk? Inherent risk is the possibility of misstatements when there is no internal control system. What is control risk? Control risk is the possibility of misstatement when controls are there, but they are weak. So let us come to point number 1. Here, misstatement is resulting. What is the amount of misstatement? 500. 500 revenues understated. But why this misstatement is coming up? The misstatement is coming up because controls are there, but controls are weak. What are the controls? Controls are only those students can attend who do provide valid registration number. That is the basic control. But how this control is weak? 5 students extra are attending the webinar. How they can attend? They can attend only when management is in a position to override the controls. For example, Vidhiji stated only those students will enroll and they would be given the license to attend. But Kamal requested Vidhiji, I have 2 articles in my firm, 3 articles in my friend's firm. They also wish to attend this program, but the last date of enrollment for this webinar is closed. Please allow them also. So hypothetically, Vidhiji says, Kamalji or our faculty, no problem. Please bring those 5 students also to attend the program. So what is happening? Ideally, those 5 students from my side should have paid the fees and then only they should have enrolled for the webinar. But because management was in a position to override its own policy, what happened? 5 students attended without any fees. So what is the problem here? The problem is because of management's position to override control, nothing is established that control policies are weak. Because of these weak control policy, what is happening? ICI suffered a revenue loss of rupees 500 because 5 students were attending without paying any fees. Am I clear? This is known as control risk. So in question number 1, what is happening? The financial statements are having a misstatement in revenue, whereby revenues understated by rupees 500. Why? Because controls were there, but controls were weak. Why controls were weak? Because policies were not followed by the management staff. Am I clear? Vipulji, any doubt over here? Just
No,
see
sir.
the chat
No,
box.
sir.
Okay.
No, sir.
Second is with folded hands. Let me take the example because Vidhiji is there. So with folded hands, just for the sake of understanding.
Oh, sir, it's okay.
Miss Vidhi was also attending the webinar. So now, what is the problem here? As an auditor, which we should be diligent about. Very simple answer. Who knows that Vidhiji's sister is also pursuing chartered accountancy course? Vidhiji's cousin is also doing chartered accountancy course. So what happened? Vidhiji switched off the camera and 2-3 students were also attending the course on this webinar. So what will happen? It is happening because of zero control policy. Because we do not have any control. I say do not have any control to fortify or to prove who is behind the camera. So de facto control policy is absent. And because of this, if Vidhiji's sister and 2 cousins are attending the program without actual enrollment, in that very case, further 300 revenue will be understated. And this is happening because of inherent risk. Why inherent risk? Because controls are not there. There is no control policy. So in my example, there is no policy whereby ICI can check who is behind the camera. In that very case, it is a kind of inherent risk. I believe each one of you must have understood inherent risk and control risk. Now, inherent risk and control risk are the domain of management. So whatever misstatements arise because of inherent risk and control risk is because of management only, because controls are designed by management. Now come to the detection risk. Now, just see my question again. Vipulji is the moderator and come reviewer. Now, Vipulji says, Kamalji, one is inherent risk. I don't know who is attending the program from Vidhiji's computer. Then Vipulji also stated, Kamalji, 500 rupees of control misstatement is there because management overridden the control. Now, please tell me, students, as an auditor, as a reviewer, as a moderator, by whatever name called, what is the detection risk? What is the detection risk which is faced by Vipulji? What is detection risk? Detection risk is the misstatement that remains in the financial statements despite vouching verification done by the auditor. So Vipulji did vouching verification, everything he did, but still certain misstatements were not identified by him. That is known as detection risk. So you please tell me, and Vipulji, you please also tell me, because you are the auditor, what is the detection risk you are facing?
So let us first see if we have any responses. Okay, this is a response inherent risk here, but this is seeming like a dated response. No worries. So I believe the detection risk would probably here be that in case there are even more students who have attended by maybe pooling together on a system,
Yes.
or maybe.
So there may be certain students who are also attending this webinar by a pool of students.
Correct.
So he will not be able to detect. Ultimately, this detection risk is coming out because of control risk only. So detection risk is the domain of auditor. Inherent risk and control risk are the domain of management. Am I clear? So students, I give you 10 seconds to respond back whether you are able to understand inherent risk, control risk, detection risk, and overall audit risk. Any responses?
We have a couple of yeses.
Okay. So I take a presumption that most of you must have understood, because this is simplest form of example. So if I go theoretically, just see again. What are types of audit risk? Inherent risk, control risk, and detection risk. What is inherent risk? Inherent risk is the possibility of misstatement due to no internal control system. ICS is internal control system. What is control risk? Control risk is the possibility of misstatements due to weak internal control system. What is detection risk? Detection risk is the possibility of misstatements due to weak substantive procedures. So whatever I was calling the vouching verification, technically it is called as substantive procedure. So Vipulji applied vouching verification procedure, but still misstatements were not identified. That possibility is called as detection risk. I believe this point is clear to each one of you. If it is clear, why we discussed all this stuff? We discussed all this stuff because auditing standard requires to document how you assessed the audit risk and what steps you take or what steps you will be taking to reduce the level of audit risk. So in my example, if I go back, what is the misstatement here? 500 rupees. This 500 rupees of misstatement is because of audit risk. Now, what you will document that. So Vipulji is my auditor. What he will document that I assessed the internal control system. Out of that assessment, I came to know that inherent risk and control risk is present. Out of this assessment, I evaluated that financial statements will be misstated by rupees 500 in revenue. This is what he will record. Then what he will record further? What steps he took to reduce the level of audit risk. Now, when I say reduce the level of audit risk, reduction will be rupees 500 to 0. So how he will reduce? For this purpose, what he will do? He will write to the management. So here, Vipulji will write to the management and will ask management that I have observed rupees 500 of understatement in the revenue because of poor control system. Rectify this thing. How management will rectify? Management will approach the students and will try to recover the fees. If this fees could be recovered, that means audit risk is reduced to 0. If it is not recovered in fully, then it will be reduced partially. And if it is not recovered at all, or it is not possible to be recovered at all, it is a loss to the entity. And then Vipulji will issue this qualified report. And all this discussion will be recorded in the working papers. Am I clear? So students, I am giving 10 seconds. Whether the concept of audit risk is clear, that how audit risk is evaluated, how it is assessed, how it is recorded, and how it is reported. So ultimately, report will say that I did my level best efforts, but audit risk was not eliminated in full, and 500 is the misstatement. Or audit risk was partially eliminated, partially reduced, only 200 rupees is the misstatement because 300 rupees were recovered, as the case may be. Am I clear? What is documentation now? Documentation of audit risk. In real world, I have seen auditors are not documenting properly about audit risk because they are not very much clear about the concept of audit risk also. And NAFRA in past, when issued audit quality reports for various listed entities, they found that auditors were negligent. I repeat the word negligent in recording this kind of documentation of audit risk. So I give you 10 seconds, ladies and gentlemen, as students, please tell me whether the concept is clear to you or not.
We have feedback coming in, sir. Superb explanation. Thank you. Understood. Clear now.
It should be clear, not all clear. Because I have this detection risk to know. So just see the clips which I left.
Yeah.
So this is the right time to understand why we are discussing documentation on audit risk. All these documentation principles, audit risk principles, reporting principles, evidence principles are contained in engagement and quality control standards issued by ICAI. These engagement and quality control standards are total 5 in components. Component number 1 is standards on auditing. So what we are discussing is at SA 230. Along with SA 230, some other standards are coming up by default, like SA 450 came up, SA 260 came up, and so on. Then is standards on related services, SRS. I will not go into detail for this purpose. Then is standard on review engagement, SRE. Then is standard on assurance engagement, SAE. And then is standard on quality control, SQC1. Only one is issued, so that's why it is SQC1. SQC1 is relevant for us, for documentation purpose at least. Question arises, you prepared the documents, Excel files, or maybe registers, copies, etc., etc. 2 questions are relevant. For how many years you have to preserve working papers? So for example, you prepared working papers for the year 20 to 23. For how many years you have to preserve these working papers? And question number 2 is, you will not complete your audit in one go. You need to make several visits to the client place. So on each day, you will be preparing some working papers. Once the audit is completed, you will bind them in a file at one place. So what is the time period of that binding? For this purpose, SA 230 is silent. We have to go to SQC1. Now what SQC1 says, just see. SQC1 says that audit file shall be assembled within 60 days after the date of audit report. So please be careful. Whatever working papers you are preparing on daily basis, they need to be bounded in a book shape. This book could be electronic or manual, that is your choice. But that activity should be completed within 60 days, not from the end of financial year. I repeat, not from the end of financial year, from the date of signing of audit report. And number 2, these audit documents shall be preserved for 7 years. So if you are completing the audit of 20 to 23 and you're preparing working papers for 20 to 23, for how many years you will say? For 7 years. That means 20 to 23 plus 7 years. So it will be starting from 23, 24, 24, 25, and so on. So this is the requirement of SQC1. Preservation period is 7 years. Initially, when this standard was originally coming into the industry, initially it was 15 years. Then 15 years came down to 10 years. At present it is 7 years. So if you're referring some books available in the market, and that book is saying 10 years, please take a note. It is no longer 10 years. It is now 7 years. So I repeat, originally it was 15. Then it came down to 10 years. Now it is 7 years at present. 60, there is no change. Now, why it is important to understand engagement and quality control standard are important for us? Why? The reason is Companies Act as well as Chartered Accountants Act. You must understood that ICAI issues auditing standards, but their compliance is the fortification of auditors. And for this purpose, we have Companies Act, Section 143, subsection 9. Section 143, subsection 9 says that auditors shall comply the auditing standards. Unfortunately, Section 143, subsection 9 deals only with audit of companies, not of non-corporate entities. NCE stands for non-corporate entities. So companies that cannot be applied to partnership firms. Question arises, if you are the auditor of a partnership firm, or you are the auditor of a cooperative society, or you are the auditor of a proprietorship firm, or HUF, or LLP, whether section 143(9) is applicable? Answer is no. So does it mean that there is no need to comply with the auditing standards? Answer again is no. For this purpose, that means if you are the auditor of a company, you are duty bound to comply auditing standards by virtue of section number 143(9). And if this section is contravened, you will be penalized under Companies Act itself. But if you are the auditor of a non-corporate entity like HUF, partnership firms, LLPs, etc., or societies for that matter, then question arises whether the auditor of these non-corporate entities need to comply with the auditing standard. Answer is yes. If they will not comply, they will be guilty of professional misconduct. Where it is written, Chartered Accountants Act. If you see here, especially the yellow portion, second schedule of Chartered Accountants Act states that a member in practice shall be guilty of professional misconduct. I'm reading only the yellow portion. If he is grossly negligent in the conduct of his professional duties, compliance with auditing standards is your professional duty. So if you're not complying, say for instance, SA 230 on documentation, or if you're not maintaining documentation, then you're grossly negligent. You can be guilty of professional misconduct. Number second, if he fails to obtain sufficient information necessary for expression of opinion, whatever information you have to obtain, that also need to be documented. Otherwise, you will be guilty. And lastly, if he fails to invite attention to any material departure from generally accepted procedure of audit. So generally accepted procedure of audit is nothing but your all the engagement and quality control standards in relation to audit, like essays. So ultimately, what is the limelight? The limelight is whatever discussions we are making with you regarding auditing standards in general and audit documentation in particular, they need to be complied by the auditors, either because of Companies Act or because of Chartered Accountants Act, or both. If this is not complied with, then the concerned chartered accountant will be penalized, as well as he will be guilty of professional misconduct. So these three slides I skipped. One slide which is still left is this one. In April 2008, Institute of Chartered Accountants of India issued preface to standards on quality control, auditing review, and other assurance standards. If you see the last paragraph, highlighted with yellow fonts, blue fonts. This para 11 of preface says that it is a duty of professional accountants. Professional accountants here means chartered accountants. Para 11 says that it is a duty of professional accountants to ensure that the standards, the statements, and general clarifications are followed in engagements undertaken by them. So meaning thereby, again, the same thing. Being the chartered accountants, you have to obey ICAI standards. You have to follow the ICAI standards. If they are not followed, then you're guilty of professional misconduct, because they do have a statutory authority, and they have the statutory authority by virtue of the decisions taken by Council of ICAI. So I'm not going to detail about that council aspect, but yes, you must understand at least at a student level that these standards are mandatory in nature, irrespective of whether you're doing audit of a company or a non-company client. So these three slides I skipped. Now I believe these are clear to you. What is the limelight? Single sentence limelight is compliance with auditing standards is mandatory for chartered accountants when they act as auditors. They can act as auditors either under the Companies Act or under other regulatory requirements. For example, LLP Act. For example, Multi-State Cooperative Societies Act. For example, Income Tax Act as tax auditors. For example, GST law as GST auditors, and so on. So up till here, if you have any question, you're most welcome to ask.
So, sir, would these be considered as good to have in case of non-audit assignments? Say, for example,
yes,
any certification assignments which somebody might take up.
Yes.
Are these good to have, or are these bound?
These are mandatory. Mandatory,
right?
So, for example, if you are issuing a certificate for a client, let us say 15 CSCB certificate, even in that case, these standards are mandatory. I should not say standards. For that purpose, guidance notes are there. Those guidance notes are mandatory. Guidance note for special purpose certificates.
Okay.
If a company accepted public deposits and you are filing a DPT3 form, for filing DPT3 form, auditor certificate is required. That auditor certificate also need to comply with certain guidelines given by guidance note. So all these are mandatory. And most of the guidance notes are giving the reference to auditing standard principles also.
So I cannot assume that those guidance notes will supersede these standards. Rather, these standards are like bare minimum.
They are complementary to each other. They're complementary to each other. So if you will refer, because it will be a high-level discussion, but for the sake of each one of you, Institute of Chartered Accountants of India has issued Code of Ethics. When you will refer Code of Ethics Volume 2, Code of Ethics Volume 2 also states that compliance with standards, number 1, compliance with guidance note, and number 3, compliance with IC announcements is a statutory obligation under Chartered Accountants. So they are bound to be followed. Take this case study. This is a real world case study only. And tell me what kind of documentation aspect you will look into. RST Private Limited is having property, plant and equipment located at several places across India. The company has a policy to physically verify its plants at reasonable intervals. The carrying amount of such PPE is rupees 1,000 crores, producing an annual output of rupees 50,000 tons per annum. That's a basic information. Now, the company has no policy to physically verify the plant located at Raipur because its value is rupees 20 crores and contribution is only 500 tons per annum, which is considered as insignificant. The plants, rupees 730 crores, located at other places are physically verified at regular intervals, but are not tallied with the property, plant and equipment register and the books on the grounds that such difference cannot arise as there is no possibility of theft from the premises. So this is what management is saying. Then management further says, one plant is there, 20 crore rupees at Hyderabad. It was not physically verified by the internal audit team due to specific refusal by Director Plant Operation. So Director Plant Operation refused that I will not allow you to audit. Why? Because he was of the view that he is one of the founder of the company. He says, I made this company. How can someone question my integrity? So this is the fact before you. Now assume that you are the statutory auditor. As a statutory auditor, from this question, give me few instances of what elements you will be documenting. All these things which are before you are called as assertions. ASSERTIONS. Assertions, that is management representation. So management says these points to you, and on the basis of these management representations, as an auditor, what documentation you will prepare. I give you 30 seconds to answer me. If you see, rupees 1,000 crore is the sum total of carrying amount, and it is being tallied 20 plus 730 plus 250. This will be 1,000 crores. So basically, this question is all about physical verification of property, plant, and equipment worth rupees 1,000 crores. So auditors are facing these kind of scenarios in physical verification of property, plant, and equipment. And my question to the people is, what documentational element you will consider for this physical verification of property, plant, and equipment?
So one response is about materiality and the decision or the arrival at that number. How is that number material?
So one will be the materiality.
Mm-hmm.
So
materiality.
we will record about materiality, why this physical verification is considered material or not. We will record the reasons for the same. Number second is, they say there is no need to tally the same because there is no possibility of theft. Ask yourself whether property, plant and equipment in books and in the record and in the physical premises, they will have difference only because of theft. Can there be other reasons for difference? Answer is yes. There could be damage also. There could be shift of plant from one place to other place. So all these differences also need to be captured. So what you will record that the physical verification program is not proper because the difference can arise even because of other reasons. You will give some sample reasons in your working papers. And lastly, management is in a position to override the control. The company has a policy to physically verify, but plant operation director is not allowing you. So management is creating hurdles in your duties. It is a kind of overriding the control policy of this director plant operation. So you will record this thing also. Again, the same thing, inherent risk is also there. Control risk is also there. Detection risk may arise because of these two risks, inherent risk and control risk. So I believe this case study is clear to each one of you.
So Kamal sir, how and when do you draw a line between inspection approvals and management being a hurdle?
That depends upon case to case. For example, if management is having no policy to physically verify, there is no question of hurdle as such. Management is having a policy to verify, but director is denying. It will be considered as a limitation on your scope, because being an auditor, you have the right to access the books of accounts or the records, the premises, etc. So depending upon case to case, things will come up. Let us take one practical scenario. Say the company is XYZ Limited. XYZ Limited is under investigation by Serious Fraud Investigation Office. Now, because investigation was going on, the inspectors of SFIO stated, until our investigation is going on, the auditors will not be given access to books of accounts and other record. They have that right. Question arises, SFIO has given instructions that auditors will not be given access to books and records. Whether this restriction is given by the client or outside circumstances, it is because of outside circumstances. So here what I will do, I cannot insist the management. I further cannot insist SFIO as well. What I will do, I will simply record in my working papers that restrictions were casted upon me by virtue of legal requirements, legal hurdles, and hence I am disclaiming my opinion. What is the disclaimer? That I cannot issue any opinion on financial statements because they were not available for examination by me. Am I clear? So the question drawing upon the line will depend upon case to case basis. Because sometimes it may also happen that hurdles are created, but by virtue of your own discussions with the client, the hurdles could be eliminated or they can be reduced to a acceptable level. Am I clear? Okay. Any question in the chat box, Vipulji?
There's a comment which says management representation. No, sir, no question.
So one thing which I must reiterate over here is all this scenario which is before you is nothing but management representation. And you will take this management representation in writing by virtue of SA 580. SA 580 deals with written representations. Then you will do risk evaluation. Then you will compute risk statements. And depending upon that, you will evaluate the audit risk. And depending upon that further, you will either issue qualified report or clean report as the case maybe. So these are certain issues which auditors generally face when they go for audit. And these issues I have taken up from my experience by virtue of audit exercise. And just see the issue first of all. So institute says in SA 240, SA 240 deals with fraud and errors. In SA 240, institute says that there can be certain situations and circumstances where auditors or auditor staff may face certain difficulties. When you will face certain difficulties in carrying out the audit, quite obviously, you will not be able to verify or conclude with the misstatement. You will not be able to identify misstatements always. So institute says, because of some problematic or unusual relationships between auditor and the management, difficulties may arise during the audit, due to which misstatements may not be identified and certain frauds and errors still may remain in the financial statements. So institute has given some elements of those problematic relationships, but institute has not given any examples. So what I have done is, I have given the elements also, examples also. Just see very carefully, everything is self-explanatory. Institute says, because of the following factors, problematic or unusual relationship may take place between the auditor and management. Due to this, difficulty may be faced during the audit, and due to which frauds and errors may not be identified. So in simple scenario, frauds and errors or misstatements in the financial statements may not be identified because of the following difficulties. Because of the following difficulties that auditor may face during the audit. What are the difficulties? So institute has given the difficulties only. Examples are not given. So out of my experience, I am sharing examples also. So let us read one by one. Number one, denial of access to records, facilities, etc. for seeking evidence. So institute says, if you are denied to access the records, facilities, etc. for obtaining evidence, you will not be able to identify misstatements. Example could be not providing access to internet. So you approach the client and you stated, give me the Wi-Fi password. Client says no. There is a current difficulty faced in accessing the facilities. Then is undue time pressures to resolve complex issues. So client is pressurizing you. For example, countless requests by the management to complete the audit at the earliest. So normally it happens in real world. Client will say to the article assistants, make it fast. So it is kind of undue pressure upon you. You will not be able to invest proper time to carry out the audit, and in hurried manner, if audit is completed, some misstatements are bound to be excluded. Then is complaints by the management about conduct of audit team. For example, article assistants are wasting times in gossips. So I send my article assistants to the client's place to carry out the audit, but article assistants are ordering pizza over there. They are having gossips. So client gave me a phone call and said, Kamalji, your boys are not completing the audit. So for this way, what will happen? The kind of relationship between the auditor and client will get tough, because client will be under the impression that team is bad. Auditor will be in the impression that client is not cooperating. So ultimately, misstatements will not be coming up. Then is key IT and other operational areas, systems, etc. denied to be accessed. For example, not providing computers for carrying out audit examination. So client is saying, my accountant is busy. He cannot give you access to the computer as of now. It is a kind of problem only. Then is unwillingness by management to permit auditor communicate TCWG. So, for example, if I give the example, management means board of directors. TCWG means audit committee. TCWG stands for those charged with governance. So I'm giving example only, not the details. Management you can say as board of directors. TCWG you can say audit committee. So what happened? Management requested the auditor, yani board of directors. Board of directors requested the auditor for not informing audit committee about the funds misused by the managing director. So this kind of request, which is a kind of undue request, if it's coming to your notice, is a kind of that you are hiding the misstatement because you are not independent. Then is tolerance of violations of entities code of conduct. So using Facebook in office hours. So entities having a policy that no social media will be accessed during the office hours. Articles are accessing Facebook during the articleship experience, office hours experience. It is a kind of tolerance of violations of code of conduct. All these problems which you are seeing on the screen are merely illustrative. They are not exhaustive. What is the theme coming up? The theme is due to certain difficulties during the audit. These difficulties could be because of internal circumstances or external circumstances. Misstatements due to fraud or error may not be always identified. And if this is the case, you have to document in the working papers. For example, I was not able to download GSTR forms from GST portal because the client has not provided me the user ID and password to access GST portal. Can we record this thing in our documentation? Answer is yes. Who is permitting you? Company that is permitting you, as well as ICI is permitting you. Are you getting my point? So this kind of documentation will fall into first case, denial of access to record facilities, etc. for seeking evidence. Take one more example. The accountant of the company, who is your audit client, the accountant of the company is always busy on phone calls. So what you will do, you will document this thing in the working papers. We requisitioned bank reconciliation statement and certain vouchers to Mr. X, accountant of the company. But he never responded to such request because he was busy in his personal work. Are you getting my point? This will be documented. And once you will document this thing, you will communicate to management also. As we discussed in the beginning, that whatever you are documenting, you need to keep the management into confidence as well, that whatever is documented is not unilateral documentation, but a bilateral documentation. Any question over here? You are most welcome to ask. Yeah, Vipulji.
So in certain cases wherein we are not bound to give an audit report, again, a consultancy sort of a service or that's sort of an assignment. If, for example, you request for a particular document and the management comes back to you and says that, Vipul, this is incredibly sensitive, we will not be able to share it with you. I understand, no problems. But we will be able to give you those extracts of the entire agreement, which will be okay for you to sail through. Your assignment will not be, kind of stalled. We'll give you those extracts. Is it reasonable on my part to accept those extracts and go ahead with the assignment without authenticating the fact whether or not those extracts genuinely form part of the agreement itself? Because
Understood.
many times the agreement or the copy which we receive could have been some other version, maybe another draft version or some other finalized version, which is not the final output. So how do we battle that question? Because
so your question itself has the answer. To have this whole episode, let us understand. First is, we need to ask whatever information I'm asking, is my statutory right or not? If I am having that statutory right and the client still denies on the grounds of it being sensitive, then it will be a limitation on scope. And I will disclaim my opinion or qualify my opinion. Number one. Number second. In number second episode, there were two scenarios. Number one scenario, it was my statutory right to ask, but the client is denying. Or number second is, it is not my statutory right to ask, but the client still is denying. Institute says, irrespective of whether it is statutory right or not, but information is required for your audit purposes. But the client is not providing you that information. Then step number one, apply alternative procedures. That means without going to the main piece of information, can you do something else? If the answer is yes, then institute says whatever alternative mechanism you're adopting, verify whether that alternative mechanism can be authenticated or not. If it can be authenticated, no problem. If it cannot be authenticated, then back to square one. Issue qualified report or adverse report or disclaimer report, as the case may be. But whatever you are doing, it will be documented. For example, I will document in my working papers, I requested lease contract from my client, ABC Limited, but the management denied to provide the copy of lease contract because in management's view, it was sensitive in nature, as lease contract was with defense companies. Accordingly, in order to carry out our audit procedures, we examined alternative evidences as follows. Evidence number one, written communication with defense companies. Evidence number second, extrapolation on internet for understanding industry practice, etc., etc. After applying alternative procedures, we concluded that on material level, the lease rent being paid is reasonable in nature, and hence we concluded to issue clean report. Alternatively, on examination of alternative mechanisms, we were not in a position to arrive at a reasonable conclusion, and hence we were not able to evaluate the degree of misstatement. Hence we issued qualified opinion or adverse opinion, whatever the case may be. Understood now?
Yeah.
So the main thing is documentation. So you're documenting what you did, why you did, what you never did, why you never did. Shall I proceed now?
Please, sir.
So this I have covered already in my oral discourse, just to have a repetition for the sake of recapitulation, how documentation is connected with other essays. So we have covered this thing in our case studies, just for the time being. Essay 210, letter of engagement. So when you are appointed as an auditor, you have to sign a contract with the management. That contract is known as letter of engagement. That is the terms and conditions under which you will be doing the audit. Documentation number one. Documentation number second, essay 580. Written representations made by the management. So I took the example of plant and machinery, physical verification, assertions. Whatever management is proclaiming before you, these are called as assertions by the management. Document the same. Then is essay 570, evaluation of going concern. You will evaluate on year by year basis. For each year, you will evaluate whether the business of this entity will be able to continue in the foreseeable future or not. So that evaluation need to be documented by virtue of essay number 570. Essay 550, now your client may be having certain transactions with parties related, like director's remuneration, managerial remuneration, purchase of goods from subsidiary company, sale of goods to associate company. Whatever these RPTs are there, they need to be identified and documented. For this purpose, we have essay number 550. Then is essay number 250. On a company of which you are the auditor, company law is not only applicable. Income tax law is also applicable. GST law is also applicable. PF law is also applicable. ESI law is also applicable. So As a statutory auditor, it is your duty to check whether each and every law, direct law or indirect law, applicable to the entities complied with or not. Now, it could be a possibility that you are not expert in income tax law, but you are expert in company law. So you will take the help of experts also. We will discuss the compliance of law with management also, audit committee also. So for this purpose, we have SA number 250. SA 250 says document the identified or suspected non-compliance with the laws and regulations and results of discussion with the management, TCWG experts as well. Expert could be like actuary, advocates, company secretaries for that matter, and so on. SA 260 and 265, which we already covered. Communicate whatever findings you have, whatever observations you have with the management and TCWG. So when you will communicate, oral communication is of no use. Always communicate in writing. So whenever you will communicate in writing, you have to retain a copy of the same. Retention of the copy means documentation. Then is SA 299. Sometimes it may happen that a company is being audited by 2 or more than 2 auditors. This is the concept of joint audit. So when an entity is audited by 2 or more than 2 auditors, different auditors will be having different allocation of work. So whatever work is allocated to you, you need to document the same. And that is why SA 299 says documentation of allocation of work amongst the joint auditors. There is SA 300, which we discussed, risk assessment and so on. You have to document overall audit strategy, audit plan, any significant changes made during the audit engagement to the overall audit strategy or the audit plan and the reasons for such changes. For example, just now Vipulji asked a question that audit evidence was not available because client says it is sensitive in nature. So originally, your strategy and plan was that you will check this lease agreement. But now client denied. So you will change your plan. No, you will change your strategy. You will apply alternative procedures. So you will document both the things. That originally we were having this plan. Now we changed because of this reason. Then is SA 450. We always discuss this thing in the beginning, evaluation of statements. Remember the question of FIFO-LIFO valuation. That is SA 450. Then is SA 315 and 240. That means you have to document the risk you assessed and the fraudulent factors you came to know. For this SA 315, also we discussed one case study in the beginning. Then is SA 500 and 530. So you have to document nature of audit evidence. Audit evidence may be reliable, may be unreliable. You will document both the things. Why you are considering reliable, why you are considering unreliable, and factors for sample selection. 530 is sampling, 500 is evidence. So in big companies, say for example, you have 10,000 invoices. You will not vouch and verify 1,000 invoices or 10,000 invoices. You will vouch few invoices. When you are vouching few invoices out of totality, that becomes sample. So how to do sample selection, what sample size you are allocating, that is required to be documented by virtue of SA number 530. Ultimately, audit report will be furnished. Before furnishing audit report, you arrive upon a conclusion. So SA 700 series says, whatever conclusions you are arriving, you need to document the same. So this is complete sentence. Conclusion reached, just give me a moment. Conclusions reached during the audit. Am I clear? So all these standards are these standards which are having a cross connection with the other standards. So Vipulji, I need one assistance from you. What is the time I need to wait for questions?
So the original scheduled time was that we continue until 12:30 and then we take
12:30, no? I have 15 more minutes, no?
We have time, sir.
So whatever we discussed here, Vipulji, please don't answer my questions. All these questions are meant for students, and I request students to answer all my questions. Let's see how much you have understood. All these questions are from practical world. Only thing is I have changed the names of the clients and some data therein. So certain case studies on standards and auditing vis-a-vis documentation. Let us have the question answer session. Question number 1. Mr. X is the auditor of ABC Private Limited for the financial year 21-22. He is of the opinion that there is no need to wait and gather external confirmations because it involves much time and cost. In the notes to accounts, however, the management disclosed that certain debtors and creditor balances are subject to confirmation. So in this case study, basically there are 2 questions. Question number 1 is, auditor says there is no need to wait and gather external confirmation. Now what is external confirmation? I am writing to sundry debtor Mr. X. Please confirm whether you have to pay rupees XYZ to my client or not. So whenever I am communicating with trade debtors or trade creditors, that becomes external confirmation. So auditor says, why to document, why to receive external confirmation? It will take much time and cost. Is he right? Number one question. Question number second, the management of the company is writing in the notes to accounts that debtors balances and creditor balances are not yet verified. These are yet to be verified from confirmation. So if management writes this thing, then what is the duty as an audit? Yes, answers. I give 30 seconds to answer both my questions. Vipulji, please, you don't give me the answer.
No, sir, I'm keeping track of the responses on the master sheet.
Just give me a moment. Let me have some water, please. Give me a moment.
Sir, please.
Thank you. Yeah, any answers?
We have one response, sir. It's from Jay. He says, case one, need for external confirmation. That's the response we have received.
Okay. So let me be quick. I request each of the student to take a note. Answer number one, by virtue of SA 500. You can take a note, SA 500 and SA 200. So two standards go hand in hand. 500 is audit evidence, 200 is objective of audit. By virtue of SA 500, read with SA 200, time and cost factors cannot be the excuses for not obtaining evidence. External confirmation is one kind of audit evidence, so you cannot take the excuse that time will be involved or cost will be involved. So time and cost cannot be the excuses. If this happens, then auditor is guilty. Number second question is, management says debtors and creditors balances are subject to confirmation. That means they are yet to be verified from external confirmation requests. Please take a note. Answer number second, SA number 705, qualified report. SA 705 says, if this kind of scenario is there, where balances are subject to confirmation, then auditor should qualify the report. So auditor will qualify the report because certain balances are yet to be verified. Had the confirmations been received, then report would have been clean. Because confirmations have not been received, report would be qualified. So simple answers are two answers. Answer number one, time and cost, not an excuse. Balances. Answer number second, if balances are yet to be confirmed, auditor will qualify the report. Case study number second. This is a very interesting case study. Let me see how many of you have heard me properly. Case study number second. The auditing client has provided rupees 2 lakhs as provision for bad and doubtful debts in the books of accounts, while auditor is challenging this provision and opines that it should be rupees 5 lakhs. So what is happening? Client says, in our view, provision for bad and doubtful debt should be rupees 2 lakhs. On the other hand, auditor says, in my view, provision for bad debt should be rupees 5 lakhs. So both were discussing. What happened? After much deliberations and considerations, both auditor and auditee concluded at a provision of rupees 4 lakhs. So client and auditor are fighting and they were discussing. Ultimately, they arrived at a conclusion that provision for bad debt should be rupees 4 lakhs. Now what happened? The auditor did not document these deliberations and considerations, as he is of the opinion or view that once he is satisfied, there is no need to keep any such record in his file. So auditor is saying, when I am happy now, then why to document? So is he correct? Auditor says, if I am convinced, no need to document. Is he correct? Yes, students, any answers? Vipulji, any answer?
Not so far, sir. Can we give them another 15 seconds?
Yeah. No answers?
No, sir.
I think people are waiting for the lunch time. Anyway, so try to recollect SA 230. What it was saying, audit documentation records three things: audit procedures applied, audit evidence obtained, and audit conclusions. What is happening in this case study? It is a conclusion that provision shall be rupees 4 lakhs. So how you arrived at this provision and consensus or conclusion need to be documented. So if auditor says, if I am convinced, no need to document the same, it is wrong. If he is convinced, he has to document how he was convinced. The reasons of his conviction need to be recorded in the working papers. Case study number 3. Be very careful because this case study is a very serious case study, and most of the chartered accountants in India are committing this mistake as well. Case study number 3. ABC and company is a partnership firm. I emphasize it's a partnership firm, it is not a company. So Companies Act is not applicable. ABC and company is a partnership firm. The depreciation was provided in the books of account in accordance with the rates prescribed under Income Tax Act 1961. What audit considerations should be observed by the auditors in this regard? For this particular case study number 3, I request you to take 40 seconds, and second request is don't search on Google. Yes, any answer now. I give 40 seconds. The time starts now.
The responses are coming in, but there seems to be some sort of a time lag. So we might have to be slightly more.
Okay.
Yeah.
So the responses must be of previous case study.
Yeah, the responses which just came in for the previous case study.
Okay. So how many responses are great explanations?
We received 4 responses sir, for the previous question. SA 230 not followed, need to document, plain no.
Okay. That means correct answers.
Those are correct answers, right, sir. We have received 1 response for this immediate question. Jay says, qualify audit report case 3.
So can you please also tell me why qualify? Because answer is correct. Here audit report need to be qualified, but why?
Jay, document your conclusion. Give him a bit of time, sir.
So Vipulji, this case study is also a case study for practitioners. And when I came to Guwahati, I found this question is also being mistaken by practitioners.
Okay.
So this is one of the common error going on. Any answer?
I'm just waiting for Jay to give me the why and how of this what. No, sir, not so far.
Okay, so let me give the answer. Please understand, rates of depreciation under Income Tax Act are not meant for books of accounts. These rates are meant for the purpose of computation of income under the head profits and gains of business and profession. Meaning thereby, the partnership firm is required to follow Accounting Standard 10 issued by ICAI. Accounting Standard 10 states that depreciation shall be provided as per useful life of the assets. So what is the conclusion? In the books of accounts, depreciation should have been provided as per useful life, but it had been provided as per Income Tax Act. So there is a misstatement, and because there is a misstatement, because of contravention of AS 10, what auditors will do? Auditors will qualify the report. So how the things will go? You will document this whole stuff, and then you will issue the qualified report that there is a misstatement of rupees XYZ, whatever difference will come up. Am I clear?
Right.
So what is the point? If I repeat, the point is depreciation rates under Income Tax Act are meant for computation of taxable income. But in books of accounts, you have to provide depreciation not as per Income Tax Act, but as per Accounting Standard number 10, useful life of the assets basis. Okay. Case study number 4. I believe for this question, you must not commit mistake because this question was also discussed during the course of my discourse when me and Vipulji were having some discussion. So I read this question now. The statutory auditor of PQR Limited did not verify the physical existence of its fixed assets. They have taken a written management representation about the fact that the fixed assets have been verified by their own staff and are existing as shown in the fixed asset records. The statutory auditors relied upon the same, but later on it was traced that some fixed assets were in fact not existing on the balance sheet date. The auditors were charged of gross negligence and they are defending themselves under the cover of declaration given by the management. Yes, your answers now.
We have a response from Pratibha. It says, consider the method.
Consider the method. Okay, think on these lines. Auditor says, in my working paper file, I have the copy of written representation letter. Whether it is the complete process auditor has done, simply by relying upon management, can we say everything is over? Answer is no. This working paper is deficient in nature because this working paper is not documenting what procedures, listen my words, what procedures auditors applied to verify whether whatever representation management has given you is true, fair, correct, unfair, incorrect or not. So you need to check the reasonableness of, management declaration over here, which auditor never did. And hence auditor cannot save himself. Why he cannot save himself? Because he has not documented whether he applied alternative procedures or not to verify the reasonableness of whatever management is claiming. And hence in case study number 4, the crispy answer is auditors are guilty. Why they're guilty? Because they have not followed the entire process. What process they have not followed? They have not followed the process of verifying whether management is truthful or not, reasonable or not, and so on. Case study number 5. ABC Limited is planning to extend its business operation, for which huge fund is required. The company therefore has prepared its projected financial statements for 5 years to be submitted to the bank for loan application. The company hired you to examine the projected financial statements and give report thereon. What things you will consider before accepting the engagement, and what audit evidence will be obtained for reporting on projected financial statements? I give you 40 seconds to answer. Yes, Vipulji, any answers?
We have a no from Purushottam, but
Okay.
there doesn't seem to be any reasoning for the response.
The
Purushottam,
no
can
must
you
be for question number 4.
seems like it.
Just see here what is involved: projected financial statements. So one thing is certain, for projected financial statements, essays are not applicable. For projected financial statements, essays are not applicable because projected financial statements are never audited.
Correct.
Please take a note. For projected financial statements, the applicable standard of verifying them is SAE. SAE stands for Standard on Assurance Engagement 3400. So standards are different, but principles are same. Documentation principles are same. So if you are preparing a project report in which 5 years forecasted data is there, and you are being engaged as a chartered accountant to check whether this project report is good or bad, then what you will consider? That's the question. Simple answer. You will check and document. I repeat, you will check and document as to whether the assumptions taken by the management for forecasting the data are reasonable or not. I believe each and every student understands how to compute net present value, that is capital budgeting. Now, when you compute NPV, net present value, or when you do capital budgeting, when you forecast the data, you cannot forecast the data on cent percent information. You need to take some assumptions. For example, I will take the assumption that sales will be growing 10% each year. You are my chartered accountant. I deputed you and asked you, please check whether my project report is right or wrong. What you will do then? First, you will take letter of engagement. Then you will start questioning me. Kamal, you are saying that your sales will grow 10% each year. How? Why you are taking assumption of 10%? Why not 8%? Why not 12%? So what will happen? Our dialogue will go in between me and you, and I will give you some reasons as to why I am taking 10%. All these reasons need to be checked by you as to whether these reasons are arbitrary or not. For example, I told you, my heart says, because of my past experience, that sales will grow 10%. So if my heart is saying, nah, it's of no use. But I say that I have obtained one order from USA customer, and this is the copy of that order. Then this copy of the order is a proof that my sales will be rupees X in next year. It is a kind of good evidence which you will document. Similarly, I gave you one more assumption that I will be purchasing plant and machinery to expand my production capacity. Then you ask me, you are writing that you will purchase plant and machinery worth rupees 100 crores so that you can expand your plant operations. But you have no money to buy. How you will buy? So I said, Vipulji is my good friend. And he gave me a phone call and stated, Kamal, I will give you rupees 100 crores. So you are my chartered accountant. Will you rely upon me? Answer is a big no. You will not rely upon me. You will say, if Vipulji is saying he will give you rupees 100 crores, give me the contract. So when I will give you the contract, then only you will be satisfied that our projections are good. So when this question is asking, what things you will consider? You will consider those audit evidences and those assumptions which are not arbitrary in nature. They must have some persuasiveness. How the persuasiveness will come in? By virtue of some documents like contracts, arrangements, and other things. Am I clear? So these things need to be documented. Number 6 case study. Mr. A is the principal auditor of XYZ Limited. Mr. B is the auditor of branch of this company. This could be possible that there could be head office, there could be branch office also, and both can have separate auditors. So what happened? XYZ Limited is having principal auditor as Mr. A and branch auditor is Mr. B. Mr. B has issued a qualified report for this branch. Mr. A is of the opinion that he is not required to consider the opinion of other auditor. So head office auditor says, I'm not duty bound to consider the report given by Mr. B. Is he correct? One thing is certain, you will document the copy of branch auditor's report. That is beyond doubt. But now the main auditor, Mr. A, says, I'm not duty bound to read out the report of Mr. B and consider the same while issuing the final audit report. Is he correct? And especially in this question, where the question says, branch audit report is qualified in nature. Qualified means that some observations are there which are not as per law. Yes, any answers? I wait for 30 seconds.
There's a response which says materiality of branch at HO level. But in case your response is not as per law, then I believe anything which is a contravention of law is always material.
Always material. So ultimately, the limelight is same. The branch audit report is qualified in nature. Qualification always is for material items.
Correct.
That means this branch audit report may have an overall impact upon the audit report of company as a whole. Reason being qualification in nature. So Mr. A is wrong if he says that I will not consider qualified report. Mr. A has to consider the qualified report of the branch because qualification may have an impact upon the financial statements of the company as a whole. And that is the reason in case study number 6, whatever Mr. A is saying is wrong. He not only is required to document the branch audit report, but he also needs to document how he considered the branch audit report. One question for you, each one of you, except Vipulji. Please don't search in Google. Tell me whether any provision is there under Companies Act which makes it mandatory for Mr. A to consider the report of Mr. B. I repeat my question. My question is whether any provision is there under Companies Act which makes it mandatory for Mr. A to consider the report of Mr. B. Any answer? No answers? Let me wait for 30-40 seconds.
So I think we should wait because the answers for the previous question just started pouring in. Mr. A is wrong. We need to consider how he deals with it.
Let us wait, no problems.
Thank you, sir. We have a response from Jay Srivastav. He says, yes, in Companies Act, Section 143.
Yes, right. So each one of you, please take a note. We do have section number 143, subsection number 3 of Companies Act. Section number 143, subsection 3 of Companies Act states that auditors have to report whether they have considered the branch auditor's report in their audit report or not. So ultimately, what is coming up? In my case study number 6, not only because of auditing standards, Mr. A has to consider report of Mr. B, but also because of Companies Act, he is duty bound to consider such report. Am I clear? Case study number 7. I have several case studies. Let me see how many of you are able to answer my case studies. Now, case studies from onwards will get tougher. Case study number 7. So, bit of a technical case study on a tougher side. ABC Limited, a listed company, has appointed 4 joint auditors for the financial year 21-22. 3 of these auditors have issued an unqualified report, but one of them has issued a qualified report. It can happen. So, like for example, there is a company, ABC Limited. For ABC Limited, there are 4 auditors who are appointed: Kamal, Vipul, Vidhi, Kapil. So 4 auditors are there. Now what happened? Vipul, Vidhi and Kapil, these 3 auditors issued clean opinion. Everything is true and fair. Kamal issued qualified opinion that inventory is wrongly valued. So what happened? In this question, what is it written? 3 of these auditors, 3 of these means Vipul, Vidhi and Kapil. 3 of these auditors have issued an unqualified report, but one of them, that is Kamal, has issued a qualified report. Having said that, what happened later on? The management of the company is contending that majority opinion. Who is majority here? Vipul, Vidhi and Kapil. Majority opinion is binding upon individual auditor, that is Kamal. And accordingly, Kamal cannot issue qualified. So, question for the house is whether management is correct, number 1. And number 2, what Kamal should do for the purpose of documentation and audit reporting. I wait for your answers.
So we have a response from Pushottam.
Yes,
He says management of the company cannot say that he cannot issue the qualified report.
Correct. Can I know the reasons also?
Pushottam, can you share your reasons also? So meanwhile, Pushottam shares his reason. We have another response from Jay. He says separate report will be there. Further, both reports will mention that there is other report also, SA 299.
Okay, taken. So first thing is, management cannot say this thing. If at all management says, then it will be resulting in casting, C-A-S-T-I-N-G, casting limitation of auditor's independence. So by management instructing the auditors that you will rely or you will not rely upon certain things, it is nothing but casting limitation on independence, which management cannot. So as far as first question is concerned, can management say that majority is binding upon individual? Answer is no. If it says, then it is a kind of limitation on auditor's independence. And you must be aware, each auditor, I emphasize the word each auditor has the right to issue his own report. So in this case, what will happen? Kamal will issue his own report and other 3 auditors will issue either a joint report or a individual report. That is their choice. More importantly, Kamal will also document in his working papers that 3 auditors have issued unqualified report and why I am different from all those 3 auditors. I will document this thing only. No need to mention anything in the audit report given by Kamal. Documentation only is sufficient. However, in audit report, which will be given by Kamal, what I will do, other matter paragraph will be there. One paragraph will be given in the audit report of Kamal, and he will be writing that these financial statements were also audited by other joint auditors. That is only sufficient. For this purpose, we have SA number 299. As a matter of general knowledge, I have to ask a question. The question is, can you please tell me, is there any provision under Foreign Exchange Management Act, or I should say RBI regulations, where joint audit is mandatory. At least in Companies Act, joint audit is not mandatory. If you will read Companies Act, under Companies Act, nowhere joint audit is mandatory. Companies Act simply says under section number 139, subsection 2, clause B, that company may appoint joint auditor. But Companies Act nowhere is saying that joint audit is mandatory. It is FEMA where joint audit is mandatory for certain companies. So you can take a note. We do have FEMA FDI regulations. FEMA stands for Foreign Exchange Management Act. FDI stands for Foreign Direct Investments. Under FEMA FDI regulations, what Reserve Bank of India says, Reserve Bank of India says that there may be a scenario whereby in India, a company is having foreign direct investment. For example, let me share example through a typing scenario on the screen. This must be known to each and every student. This would be a practical touch. So the company is Microsoft Networks Incorporation. It is there in USA. Okay. Now what happened? This company invested in 100% equity of Microsoft Mobile Services Limited, India. So this is a case of 100% FDI. I believe this thing is clear to each one of you. Now what happened? Microsoft, I should now write here, Microsoft USA instructed Microsoft India to appoint, say, PwC as auditor. Now this PwC is global firm. Now what happened here? RBI mandated that in such cases where global firm is an auditor, then the company having FDI shall also appoint one local audit firm as auditor. So what is happening now? Microsoft Mobile Service Limited will be appointing PwC as an auditor because of the instructions of the investor, that is Microsoft Networks USA. So what happened here? RBI will come into picture, and RBI mandated that if you are having a global firm as an auditor, it is a mandatory requirement that you must also appoint a local auditor. So now what will happen? Microsoft Mobile Service Limited India will be having two auditors. One is PwC and second is a local firm. So this is the concept of joint audit. And when there will be a joint audit, what will happen? The documentation principles which we discussed and the principles of SA 299, which we discussed in a brief manner, need to be applied by whom? By the local audit firm. Why I'm saying local audit firm? Because internationally, at international level, we do not have SA 299. SA 299 is a standard which is there in India. It is not there at international level. So we do not have any international standard on auditing 299. It is only in India. Case study number 8. The senior partner of ABC and Associates, a CA firm, calls upon the audit assistant and instructed him to follow the same materiality level as adopted during the last year audit, unless the internal control system has been deteriorated substantially. So what is happening? Say for example, Vipulji is my principal employer. I am his article assistant. Now Vipulji says, Kamal, you are deputed to audit ABC Limited, or let me change, you are deputed to audit XYZ Limited. I said, sir, I will carry out the audit of XYZ Limited. Please tell me what is materiality level. Now, what is materiality? Materiality means significant items. So I will ask Vipulji, sir, I'm your article assistant. I will check the significant items only. Please tell me what are these significant items I must check. So Vipulji replied, check those significant items which were significant last year also. Unless and until there is a change in internal control system. Question rises whether Vipulji is right. Shall I check those significant items which were significant last year and I should not change unless and until the internal control system is going poor in quality? Answer is no. I have to change my materiality level depending upon other circumstances also. For example, change in law. Earlier it was VAT, now it is GST. So again, I will revise my materiality. Earlier, Schedule 3 was different. Current year, Schedule 3 is amended. I will change my materiality. Earlier, definition of small company was different. Current year, definition of small company is different. I will change my materiality, meaning thereby what I'm trying to inculcate, materiality is dependent not only on internal control system, but other factors also. For example, change in law and regulation. For example, change in scale of business operation. Earlier, you were selling only Chyawanprash. In the current year, also selling shampoo. So your scale of operations is widening. You have to change your materiality level. So what is the learning over here? You have to document in your working papers why you have not changed materiality or why you have changed the materiality. Both ways you have to document. Number 9 case study. As a result of analytical procedures, the independent auditor determined that gross profit ratio, GP ratio, has declined from 35% in the preceding year to 30% in the current year, and accordingly advised the management to disclose the same in the notes to accounts and express the opinion about going concern of the enterprise comment. So what the auditor is saying that GP ratio is going down, and hence I believe that company will not be able to continue in the foreseeable future. And that is why the question says he commented about the going concern of the enterprise. I give you 30 seconds to respond back whether auditor is correct, whether GP ratio is the only indicator to comment about inappropriateness of going concern.
We have a question which says, what are analytical procedures?
Analytical procedure is comparison. So last year GP ratio was 35%. Current year it is 30%. So analytical ratios are there. Analytical procedure means application of percentages to compare two sets of data. So when I'm comparing last year P&L account with the current year P&L account, I found that GP ratio is declining from 35% to 30%, 5% decline. In your costing, you carry out standard costing. It is also analytical procedure. Marginal costing, analytical procedure. So in my question, analytical procedure is only one. GP ratio is downgraded. So current ratio, GP ratio, NP ratio, liquidity ratios, all these are called as analytical procedures.
We have one response, sir. It says unreasonable demand.
Unreasonable demand. Okay. So what you need to understand, simple words. GP ratio may go down, maybe because of inflation, deflation, maybe because of increase in cost, maybe because of decline in sales. But that doesn't mean going concern is inappropriate. Going concern may be impacted by other reasons also. For example, loan default. For example, insolvency. So if other factors are not there, GP ratio is only one of the factor, meaning thereby GP ratio decline cannot be the whole sole factor to say that company will not be able to continue in the future. Other factors also need consideration. So if your company otherwise is growing, but GP ratio is declining, that doesn't mean that auditor will comment upon the same. But yes, you have to document. You have to document in your working papers that why you have considered going concern is appropriate or why you have considered going concern is inappropriate. I also discussed this thing in this clip. Let me show you. Just see SA 570. Third bullet point. Document the evaluation of going concern assumption. So that you need to document for sure. So this is it from my side. If you have further questions or further discussions we made, you are most welcome to ask.
There was one question, sir. It's been pending for some time. There's a question which talks about are we allowed to make any changes to the working papers or the documentation that we have prepared so far?
Absolutely yes. But whenever you will change, you will document the reasons for change also. So you cannot simply cut or erase the earlier documentation. If you are revising the documentation with further inputs, in that very case, what you have to do, you have to record the reasons also. For example, let me take an example from real world. You went for audit on 10th June 2022 and you observed that inventory was valued on LIFO basis. So you recorded the observations and the consequent misstatements in your audit file. You also communicated this observation to management. Management rectified this error and valued the inventory on FIFO basis. You again went to the client premises, say on, let us say 5th of July 2022. On 5th of July 2022, management updated you that whatever observations you gave me on 10th of June have been rectified. So when management will rectify the errors committed by them on account of your observations, these are known as audit adjustments. So what you will do, on 10th of July, you will prepare working paper and you will revise your working papers without erasing the erstwhile observations. But you will record, in pursuance of the communication and observation made on 10th of June, the management has asserted that they have rectified inventory valuation and accordingly misstatement was removed on 10th of July 2022. And then you will also record the workings made by the management and documentation will be closed. So this is a case of revision in documentation. So yes, as far as your question is concerned, question is appropriately answered. Now, documentation can be revised, but it cannot be altered. Please remember, documentation cannot be altered. If you require alteration, you have to prove that whatever alteration is carried out, that was a kind of human error or clerical error. And in that very case also, you have to document what was the error, why it was altered. So you have to be very careful at the time of alteration. Revision is always allowed. Yes, any other question, Vipulji?
Would an NDA, a non-disclosure agreement, also be treated as something which casts any
Yeah, non-disclosure agreement is a part of your audit documentation. And obviously, yes, it needs to be shared only with the designated parties, not with all.
So can the client also
So
come back and
non-disclosure
say,
agreement is a part of documentation.
So can the client also come back and say, and it happens in a couple of cases and it becomes a sort of a tussle also. When the client himself comes back and says, if you're under an NDA, you cannot take any property or any intelligence which got developed outside of this assignment back to your offices or maybe to your own.
So again, the same reply I will give. NDA cannot override those elements which are your statutory rights as an auditor. So like section number 143 subsection 1 is here. Section 143 subsection 1, Companies Act says that auditors have the right to access the books and records. So long as those books and records are in the domain of your audit examination, no NDA can override that thing. Because even otherwise, you have to maintain confidentiality as per Chartered Accountants Act. So NDA cannot override that confidentiality premises. So if NDA says that this information cannot be shared with NAFRA, but that information is pertaining to audit perspective, to that extent, NDA will be ultra virus.
Correct, sir. We have a question from Jay, sir. He's asking, are the auditors mandated to be present at the time of physical verification of fixed assets?
No. For this purpose, you can refer SA 500. Physical presence is not required. But yes, they have to substantiate that whatever physical verification management has.
Responses that we have received so far. and the questions have also been addressed by you. I think we are ready to hand over the session back to Vidhi ma'am, in case there's something else you want to add, sir.
विधि जी आपका कोई क्वेश्चन नहीं है डॉक्यूमेंटेशन
Right. Thank you so much. And such an interactive session. Itne questions, sir, we have not received so far. After ITR sessions in the month of July and all that, this number of questions has been raised by the students in the live webinar. So thank you so much for that.
Pleasure, Vidhi ji.
And thank you, Vipul sir, for such an interaction with all the students and passing all the questions to the sir on time and to the students also. Now coming to the formal vote of thanks. Good afternoon, everyone present online. Our chairman, Sir C. Sushil Kumar Goyal ji, and respected vice chairman in his absence, C. Sridhar Mupala ji, and all the participants. It is such an honor for me, on the behalf of Students' Club Enrichment Board, to thank you all dignitaries. I extend a warm welcome to the students present online in the webinar. I may like to express our sincere thanks to CA Kamal Garg ji and CA Vipul Jain ji for giving an excellent coverage to the topic audit documentation and encouraging with us with your words and enhancing the knowledge in such a lucid way. You presented with the live example and the case studies in which the maximum number of students have been interacted so far, which then be very easier to understand and they can be used in their future perspectives. I must thank all the organizing teams for working hard for every weekend to make this series of webinars successful day by day. I congratulate all the participants for their active participation. Thank you everyone once again for making it a great success. So dear students, stay tuned with us on every Sunday from 10:30 a.m. to 1 p.m. to enhance your skill sets on practical aspects. And every recording will be uploaded on the DLH platform. You just log in and go to the SSCB channel and you can download all the PPTs and you can view all the relevant webinars over there. Thank you so much.
Thank you so much.